Good morning, YouTube, and good morning, 99 family. So today, um, we're going to get into one of those good old credit secrets. But before we do, I just want to remind you guys, on this channel, we talk about personal finance, business finance, and professional development. And if any of that may pique your interest and you are not already, please don't forget to subscribe, hit that notification bell so that you can get all of our great content that we put out on this page, in addition to liking the video and leaving any comments or questions that you have down below. With that being said, let's get to the video. So today I'm going to give you guys one of the good old credit secrets to how your favorite credit YouTubers are getting their approvals. This is one of those things that you have to be very, very careful with. But I'm going to try to outline it as simply as possible so that you guys can understand this. If you look here, we have what is a credit spree. So this is all about the credit spree. So definition, it's a verb, that's part of speech. The act of applying for multiple credit products rapidly or simultaneously. So what a credit spree is, you may not already know this, but this is how most of us do our approvals and get our cards, back to back, and so many cards approved so quickly. What we do is we know which banks pull from which bureaus, or at least we have an idea of which banks pull from which bureau, because you can never know 100%. Then either very rapidly we apply for all the cards that pull from one bureau, or even simultaneously we may open 2 or 3 browsers and apply for 2 to 3 cards off of each bureau. Sometimes if we know a specific bank doesn't do double hard pulls, we may go back and double dip. Like with Navy Federal, if you go get a personal loan, you can also get a line of credit off of the same hard pull if you do it within 30 days. AOD, if you get a credit card, you can also get a line of credit if you do it with them within 30 days. So just be knowledgeable of that you do have that ability to actually make that money. Like, the ability is there, because, or not make that money, but acquire those funds. The ability is there. It's just knowing how to go about doing it. So the main thing that you have to do is you want to come up with, I generally do 3 for each bureau. 3 for Equifax, 3 for Experian, 3 for TransUnion. Figure out, 3 cards that pull each of those bureaus. Then once you do that, you apply for those cards either at the same time or really closely together, so that it kind of gives a trip to the system, where the banks will approve you more than likely if they approved you for the previous card. And that's kind of how it goes. When you get that one approval, then you can hit all of them. Or if you know that it's your time is coming up for those approvals, then that's one of those things. I will say, be mindful of Capital One if you're using this technique, because they pull from all 3, and that can definitely make this harder for you. But let's go ahead and talk about the pros and cons of this credit spree technique. Again, those higher approval rates, is definitely one of those things for you to think about, that you have a higher chance of getting approved for multiple cards if you're doing those applications simultaneously. The Your accounts will have the same age. So it's good always to have a base. So if you get a card that you don't like, you can always close it out. And that's one of those things. You get 3-4 cards at the same time that are the same age. You don't like one of them, you close one of them out, it won't hit your credit age that bad. This could potentially minimize your inquiries on each bureau, because you will be able to kind of pick and choose which bureaus you want to apply for, knowing which cards you're more likely to get approved for. It'll benefit you there. Cons is you'll have multiple inquiries within a short time frame. That can actually trigger auto denials also. So just as well as this can trigger approvals if you use it properly, it can trigger auto denials if you are over using this technique, or if your score isn't quite there to take advantage of this. And the last con is that it can drop your average age of accounts, which we all know. If you get 3, 4, 5 accounts quickly, your age of accounts will drop drastically, because that'll be like 5 zeros going on your accounts as far as age. However, it will build back up every month with those accounts aging, and it will build back up stronger. And the more you do this, the less that it will affect your credit when you do it in the future. With that being said, I just want to thank you all for watching. Thank you all for being a part of the channel. Please don't forget to like, comment, share, and subscribe. And I will see you all in the next video.